The truth about buying a home in the UK. 5 rules to avoid for beginners. Rule number 1, the onboarding process as a first-time buyer. Avoid looking for properties as your very first step. The problem with this is you start looking for properties unknowingly outside of your budget, which can make it harder to adjust to the properties within your budget. The first thing you want to do is understand how much you can borrow, the minimum deposit you need, the monthly payments, and the type of mortgage lender that your credit score will pair you with. We call this the onboarding process, which our clients go through as the first step. We want you to move forward with this first step and ensure you're looking at the right properties from the outset and that you pick up your keys at the end of the process. If you'd like to move forwards with this first step and ensure you're looking at the right properties from the outset and that you pick up your keys at the end of the process, then just book a free, no obligation chat with me. The link is in the corner of the screen or in the description below or in my bio if you're watching outside YouTube. Rule 2, you may see the words offers over when looking for properties online. Once you know the maximum purchase you can go to, you need to look for properties below your maximum. One of the biggest mistakes I see is first-time buyers can go to, say, £250,000 as the maximum purchase price and then start looking for properties on the market at £250,000. Now, quite often you may see the words offers over, which means the sellers are looking for more than the advertised price. So if your maximum budget is £250,000, then you're looking at properties for offers over £250,000, then you're never going to get that property agreed at your price, even though it's technically on the market within your budget range. It's a tactic to get you interested initially and get their properties on more eyes. Don't fall for that one. Rule number 3, every mortgage lender has different credit score criteria. Don't apply with a mortgage lender just because you bank with them or because they have the lowest rate on the market. In these days, it's not as simple as just going on some comparison website and looking for the cheapest deal on the market. How do you know that that mortgage lender is going to lend you the money for that property you are buying? There's so many variables in today's mortgage market that you have to know what is going on with your credit score in regards to Experian, Equifax and Transunion. It's no good having an Experian credit file if a mortgage lender uses Equifax to assess your credit score. Download a checkmyfile credit file which has all 3 credit agencies on one file and is designed to help you as a first-time buyer. It's a very intelligent credit file. It's free to download for the first 30 days and £14.99 thereafter, and you can cancel at any time. If you're signed up with Experian or Equifax, then you're going to get much more value. Move to checkmyfile if you're a first-time buyer. The link's in the corner of the screen or in the description below. So pause this video and get that file now to improve your chances of mortgage success. Or just go to link.alexkerr.co.uk/checkmyfile. Rule number 4, don't apply for a mortgage with a weak employment history as a first-time buyer. Treat your employment history with respect. This is the most important area you need to be the strongest in. If you've only got 1 month's continuous employment history, personally, I would wait until you have 12 months if you want to increase your chances of mortgage success. Of course, there's mortgage lenders that will look at you with not much of an employment history, but your application's going to be scrutinised much more, and I'd rather be patient and prepare properly rather than putting yourself through a nail-biting application which is back and forth continuously, where you might get the mortgage, you might not. Rule number 5, don't treat the mortgage lender's valuation as a thorough survey. All the surveyor is going to do on a basic mortgage valuation is wander around the property for 5 to 10 minutes, double check that there's no obvious major concerns that meets the eye and that the property is worth what you're paying for. The mortgage lender doesn't really care about the property as much as you would. As long as they get most of their money back, if the buyer defaults, then they're happy. If you're buying a property over 2 years old, then I would be considering a home buyers report. And if you're buying a Victorian property or a property that has had a lot of structural change, then I would be considering a full structural survey. If you're buying an apartment, I'd be considering a full structural survey because a Section 20, which could be sprung upon you at any time, means you're responsible, along with all the other apartment owners, for the maintenance of that property for the entire building. A home buyer's report or a full structural survey is going to provide you a more detailed report with photos, recommendations, in-depth reviews on everything from the structure, the windows, the roof, and the history of the electrics, the gas, the boiler, and so on. They'll even take specialist equipment in to measure the walls and floors for dampness, something that basic valuations just don't pick up. The last thing you want is mould appearing, and buyers have all sorts of tricks for trying to cover that up during viewings. We've got a free quoting portal for first-time buyers to use where you can obtain free survey quotes from RICS qualified surveyors. And the best bit is once you obtain your report, just email it to surveys@mortgagechain.co.uk and I will personally look over your report and provide you with a personalised video recording of a personal consultation on your survey. A more detailed survey can look a bit scary at first glance, and a lot of the time there's nothing to worry about. You can obtain your free survey quote at mortgagechain.co.uk and select Clients and Quoting Portal, or by clicking the link in the corner of the screen or description below. This week's bonus tip. If you are trying to obtain a mortgage and you have had some debt like credit cards or loans which is reducing your affordability, then try an affordability calculation using Santander, who are a fantastic lender, and sometimes as long as your debt to income ratio isn't too high, they may not take the debt into account. Check it out, it could be worthwhile. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for checking out today's video. Please check out the show notes for a recap with access to any links discussed today. And please do consider subscribing for more tips and bonuses just like this. Have a beautiful day. I'll see you in the next one.